Good morning, everybody, or Dobry Den. It's really a pity that we cannot do it physically, but I think the current circumstances do not allow it, and we have to understand the situations. But I really love to go to Prague, and it's a beautiful city, and I would really like to have joined you physically for the third time. In my presentation, I would like to actually start with my previous recommendations that I was giving actually 2 years ago and 1 year ago, because I think it's always good also to look back what has happened. So I would actually like to say a couple of words on Pandora. Pandora was my recommendation basically 2 years ago. And as you remember maybe well, for the ones of you that have been there, the situation was that in the first year, it was not really performing as I have expected. But if you look at Pandora now over 2 years, you basically actually see that the performance has been pretty well. And the stock was basically compounding at 34% on an annual basis, which I believe is actually quite an attractive performance. Even now, on the next slide, you see basically that Pandora is trading on okay multiples. I mean, it's not as cheap as it was 2 years ago, for sure not, but still it gives us a 2.5% dividend yield, and it's trading around 15 times. If you look at my favorite chart, which is basically the Pandora earnings and the dividends and the share price, you actually see that we still believe that Pandora has still some nice upside, and that's also the reason why we still hold it in the portfolio. And I think it can be used as an example that as an equity investor, what you do not able to tell really is at which moment undervaluation is detected. And I think Pandora is a very good example of that. Now, let me go to the next example. That was my recommendation of last year. That was Premier Oil, a UK-based oil exploration and production company. You basically see the share price development since I recommended it. It was going in the right direction until COVID happened. And then the stock dropped like a stone and was really having a very, very, very bad performance, and is basically still down there. Now, why was that? I told you last year that the company has quite a bit of debt, but under normal circumstances, this debt could have been handled. Now, unfortunately, with COVID, with the oil price that dropped so dramatically, Premier Oil really had problems and keep on having problems with this debt. Now, in both cases, already in Pandora, but as well in Premier Oil, I told you that to me a risk could be that basically at one point in time, a private equity investor could come in and step in and grab quite a bit of the upside. In the case of Premier Oil, that's actually happening. It's not yet fully decided because all the shareholders as well as the creditors have to say yes to that. In this case, it helps Premier Oil to survive if they are actually merging now with this private equity group. And they will actually then be the largest independent oil E&P company in the North Sea. But of course, the upside is not as big as it was. But we would recommend there to wait and see until the creditors and the equity investors have agreed on that. And then we agree that the situation has improved substantially and Premier Oil should be multiplied by 3 or 4. Unfortunately, not any longer by 10, as we expected 1 year ago. Valuation-wise, you see that it's trading at a very low multiple and at a very low price to book. But now let me go to this year's recommendation, and that's a different company than the two previous one. And the company is called Devro. Devro is a specialized company in a very small niche market that is produce basically the casings for sausages. And you see here a very nice picture with different type of sausages. It goes from salami to frankfurters and etc. etc. The company has an 85-year of history, They mainly produce collagen-based sausage casings, because you have different types, as I'm going to explain you in a minute. And they all have a leading position. Almost globally, they are basically number 2. They are actually able to have a mid-single-digit growth with decent margins, and therefore the company has some good returns in our view. Looking on the next slide, you basically see that they are really in a niche market. The total market of casings, collagen casings, is maybe 3 billion. Total casing market is 3 billion, and the collagen market is 1.1 billion euros. And you have different type of casings. Obviously, the gut one is going down, and the collagen is going. On the next slide, you basically see that the market growth per year, as the market expects to have a growth rate between 2 to 4%, and Devro, we believe, could even do slightly better than that. You see that in different regions, in established markets, it's growing a bit less, and in emerging markets, it's growing. In the specifically Asia Pacific, it's growing 3 to 5%. The underlying market growth is again 2 to 4%. We believe also there's a clear tendency to increase protein consumption, driven by urbanization and higher living standards. And that gives basically an opportunity to grow also with the conversion from gut to collagen. On the next position, on the next slide, you basically see the leading position in most markets. It's either mostly a number 1 or number 2. In China, they're currently number 4, but we believe that their premium brand is now starting to kick in. If you look on the next slide, Devro's global manufacturing footprint, you see something interesting, and that's why I also thought it's a good example that I should take as a basic recommendation for this year for Prague, because you see that 35% of their footprint is actually in the Czech Republic. They have production site in Liberec, but also outside of Brno, close to Liberec and outside of Brno, where they produce basically 35%. But in all over, they are really a global company. And what's interesting to say is that enough casings to circle around the Earth more than 80 times. Now, why is Devro a good company? We believe it's a leading position in a niche market. It's an oligopolistic structure and with a very disciplined leader called Viscofan. Viscofan, by the way, was a company that we had for a long period of time already, several times, basically in our portfolio. And we had it as well this year until it really went up very nicely. And we we actually then sold it to buy more things that were lagging the market. Viscofan is a Spanish listed company as well. A very good point is also that the economy of scales in this production is very, very important, because that leads to a cost advantage. And to me, almost the most important point is the following one: the small ticket per unit. That really helps the client yielding basically and have high Swisher costs. I mean, just imagine you have 3 global players, mainly the Viscofan, then Devro. In addition, you have some Chinese competition, but your buyer of the product just simply pays 2% of his costs to produce a sausage for the sausage king. So he does not want to play around with the quality, because that's paramount of importance. If it's too thin, then it breaks. And you could imagine that actually then the cleanup costs are much higher than actually to pay the guy that delivers the skin a bit higher price. Or if it's too thick, you could end up having the FDA in the US behind your neck because the sausage was getting bad. Therefore, I strongly believe if you have such a small ticket item, and it's very important for you, you're willing really to spend the money you need and you don't worry too much. And that's the niche we believe that makes it so attractive for both sides. And of course, there's also intellectual property involved with high entry barriers. And what's very interesting, because the market is so small, an Unilever or Nestle would not even go there. What's interesting, actually, Devro was originally actually a management buyout from Johnson & Johnson. Now, why is Devro a good investment? As I told you, we expect them to outgrow the market, which is 2 to 4%. So we expect them to grow in the range of 4 to 5. We argue that the margins are attractive. They have the margins of 25 to 26%. And we argue that these are sustainable. The situation on the returns, we believe they are probably even able to increase them to convergence maybe to 14, 15%. And the balance sheet looks good to us. They have some debt, 125 million pounds, but we argue that that should be acceptable because they generate an EBITDA of around 60 to 65 million pounds, and which is basically 2 to 1.5 the target, and they cover basically 5.5 times the interest. Why is now Devro a good investment? Because it's fun to have a good company, but then why should it be a good investment? It's trading very, very attractively. It's trading at 10 times, 9 times. The historical median was 15 times over the last 25 years. EV/EBITDA, it's trading at 6 times, and it's paying a dividend yield of 5%. The free cash flow yield, according to our calculation in 2021, will be in the range of 10%. If you do a 360 valuation, applying a median PE, EV/EBITDA, DCF at 10% discount rate, price to book, we obtain basically intrinsic value of 240 pence, which generates for us an IRR of 13 to 40%. Why is it cheap? Well, we believe it's cheap because management historically did some mistakes. Among others, they were a bit too aggressive, too fast in China. We believe China will come in the premium market, but they were a bit too fast there. The other reason why it's probably cheap, it's small and it's not very liquid. And because of that, only a few analysts are covering it. Now, if you look at my favorite chart that I also showed for Pandora, you basically see here that the earnings expectations are very attractive relative to the share price. The light blue bars are actually the dividends. You're basically sitting with the stock price on the dividend floor. So we strongly believe that it is an extremely attractive company at an extremely attractive price level. And you really see that the price target of 240 pence is absolutely feasible. You basically see that on the summary page on Bloomberg. It is trading on consensus estimates, 9 times earnings 2021, 6% dividend yield. And for us, that's really a bargain. With that, I would like to conclude. We have our long-term investment fund, the Classic, where we basically have the 3 names still in the portfolio. Devro is for us a very attractive additional add-on because you want to have in this uncertain market also some stabilizer in the portfolio. And we believe that it is very, very attractively priced. With that, I would look forward to meet you all physically again in Prague next year. Hopefully, I wish you good health and take care and see you next year. Bye-bye from Switzerland.
So, we heard from Alex, we heard his presentation, and we should have him now live. Alex, can you hear us?
I can hear you well. Can you hear me?
Yeah, hi, how are you? Nice to see you.
Actually, not too bad, not too bad. The sun is shining, and Pfizer and BioNTech gave some interesting information out today.
Yeah, some big stock moves today.
Absolutely, I have a passive preach today because a lot of stocks are up 8-10%.
Yeah, yeah. What is Devro doing today?
Devro is, as I indicated, rather a defensive stock, but it's still up 3.6%.
Okay, okay. So I know that I think Devro has a business in Czech Republic. I think they own Kutizin in Jilemnice. Is that right?
That's correct,
yeah.
Absolutely. And they have the two production sites, one outside of Debrecen and the other one outside of Brno, basically, close at your place. I was checking it on Google Maps, so it's really there, I suppose.
Yeah, and the origin is in Jilemnice, so that's other part of the country. But okay, so now I think you own or you owned several times in the past Viscofan, right? Can you contrast and compare these two companies? I mean, I'm the same business, but do they differ in some way?
You're absolutely right. I mean, Viscofan was actually the first company that we bought in this very oligopolistic space. We like Viscofan a lot since many years. It's by far the leader and the number one. They have 50 to 55% market share in the global skin market. So they're really the leader. Of course, the leader with hardly any debt, then of course has also other valuations. And that's why we were actually able to buy again and again Viscofan after they corrected quite heavily. So they corrected, for instance, the last time during the African swine flu, as it was called, which is hardly known to anybody now, but it was a big thing. And due to that, a lot of pigs had to be slaughtered in China. And therefore, the market was taking that very negatively and gave us, on the other hand, the opportunity to buy Viscofan at a P of 14. But as it goes up and normalizes, then of course investors go back to the story and they were starting to bid up again the stock to a multiple of 24, 25, 26.
Okay.
After we have bought the first time Viscofan, we of course checked the competitors. That's a normal process if you do a 360 analysis. And the second operator in the world is actually Devro. They have had a bit more debt throughout the way. But on the other hand, with the new management team in place now already for a couple of years, we believe they should be able to close the gap. So we argue, yes, it's a number two, but it should be a good number two.
Okay. We have a question from the audience. What does give you the confidence that Devro will be able to grow by mid-single digit, considering the last 2 years the revenues have been in decline, and in the meantime Viscofan, as a key competitor, grew by 10% cumulatively?
As I indicated shortly in the presentation, they really had some issues on the capacity because they really expanded the capacity. Specifically, they expanded also quite a bit of capacity already in China. So they are basically ready for the next move. And in general, as I also stated in the presentation, in the main markets, we do not eat too many more sausages. So we are basically there. But of course, in emerging markets, people really start to eat hot dogs and the like. And therefore, we expect to have a growth rate mainly in emerging markets. And therefore, we would expect that this investment that Devro was a bit early to invest that much in China should pay off. And that is the main reason why we expect actually the whole market to grow between 3 to 5%, which we believe is not too aggressive if I'm looking at some growth assumptions from some growth companies.
Okay. Another question. Do you have a prediction how much Brexit could affect Devro?
We have an assumption, and we would argue that because of their production side being really on the globe, and by far basically 35% of the production is in the Czech Republic, A lot of production is in the US, and as I stated just before, a lot of production is also in emerging markets, particularly in Asia. Basically, it's a UK-listed company living or having the headquarters in Scotland. We would not expect to have too many hassles because of it.
Okay.
But it's a good question.
You mentioned at the end of the presentation that 4 years back there were some management mistakes. Can you tell us more? And has the management changed since then?
Yes, that's absolutely the case. As indicated, the management has changed since then. And the point is really that the previous management was very, very aggressive. And we would argue a bit too early in the sense that they were too positive on the possible growth rates in emerging markets, and particularly on China. We would argue, yes, you have a chance that you can develop a premium sausage market or sausage skin market in China, but we were thinking that needs a bit more time. And of course, the stock price was then also hammered, and we have had this fantastic opportunity. And what's also very important to realize is, even if they would not grow as much as we would expect, which is 3 to 5%, they would still pay a dividend of 6%, which we would argue is very, very attractive. And once again, like a bit in Pandora and Premier's Oil's case, we think that one of the risks is that somebody comes. Private equity investors have deep pockets today and not a lot of ideas, and they could grab it.
The free cash flow that was indicated, you said could be about 10% free cash flow yield.
Exactly. Yeah.
If the dividend is 6%, so most of that goes to dividend, and the rest of it goes. What is their asset allocation policy?
I mean, their asset allocation policy is really to have a very solid dividend to be paid out on a very regular basis. And you know, the interesting business about this business model or the business itself is that they do not really need to reinvest a lot. If they added capacity as they did, they are basically ready for the next growth phases. And that's very interesting. I think that's the case for several companies in the very stable company business, in the nutrition business, that from time to time they have to scale up for the next phase of growth. That costs quite a bit of money, but then you basically have payback time, and we would argue that Devro is at this stage.
Okay. Now the final question, not related to Devro. I mean, before you came on, we had a lunch break and we were discussing the news from Pfizer today and how this could bring about a large sector rotation on the market, because companies like typical COVID stocks like Peloton and Zoom might suffer a lot, and companies that like travel business, that suffered because of COVID now can have a big comeback, and some of the price moves today already indicate that. So if that sector rotation happens, do you have a favorite sectors maybe, or favorite stocks that we might want to look at?
Yeah, I mean, you know us very well then. You know what we like a lot. But I must also say that this morning I was following the presentation as much as I tried to understand Czech. I think this is for sure a company that should take advantage. Your proposal then will probably also take advantage of that. And then, of course, World Fuel Services is another one that should do pretty well. And I mean, in general, our biggest conviction today is we strongly believe that we will see pretty soon a much higher oil price. And therefore, it's not only World Fuel Services, but some very interesting oil companies that are hated by the market. And I actually share, of course, the opinion and the hope that this finally creates a rotation, basically more towards fundamental investing.
Yeah, I think the weighting of oil sector in the S&P 500 is down to something like 1.5%, which I think is totally crazy. And I also think that the oil is going a lot higher in next years, and whoever figures out how to make money on that could probably make a lot of money. It's not straightforward, but I think this is the way to think about it. Well, thank you very
Absolutely.
much. I'm very happy to have you here. It was a nice presentation, and I hope to see you soon in person. Take care and bye-bye.
Thanks a lot, and take care. Best regards to your family and to all investors, and stay healthy. And hopefully we can get vaccinated soon and we can travel again.
Yeah, thank you. The same to you. Bye-bye.
Bye. Bye-bye.